Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about STEM Inc. And that's right, it is time once again to be doing an earnings preview for STEM because they're going to be announcing earnings this week on Thursday. So that is going to be coming out this week after hours at 5 p.m. Eastern Time. So if you want to cover that information, I'll be doing so here on the channel. We'll be tuning into that live. So the question is, what are we going to be expecting? What are we looking for? And to do that, I want to showcase two presentations, one being from the original SPAC presentation in January of 2021. The second is going to be the Also Energy presentation that they leveraged for 2022. So there's a lot of information that we've previously covered on the channel, but I'm going to be primarily highlighting the things that I am going to be looking for from these earnings. So just as a high-level overview, in terms of where things currently sit today, the stock is currently trading at about $10.65. This has been on a consistent downtrend throughout the calendar year. You can see that last year we had those crazy swings, but since they actually merged and they had that brief spike over the summer, it has been on a steady downtrend all the way down to as low as $10.42, which we are not far off. Just keep in mind that I recognize that there are a lot of broader market factors that are at play here. However, the company is coming into this earnings announcement at a very high valuation, and I completely understand how the market is pressuring companies that are not profitable at this point in time. Just keep in mind that a large percentage of the liabilities associated with STEM are there due to the fact that they are at a 1% interest rate bond, as opposed to other instances of debt for a lot of other companies, especially larger companies that don't have access to those green bonds that STEM was able to access. So what does that look like? Well, right now you can see on the right hand side of your screen, we've got those price to sales and price to books ratios. The one that I'm going to be heavily focused on is price to sales. So price to sales is one of the better metrics to leverage when you are valuing a company that is not profitable. Essentially, it's saying what percentage of the sales can we expect to see tied into this current price. So right now it's saying that it is trading at right at 22 times the trailing 12 months over the past 12 months sales numbers. Keep in mind that 50 to 60% of 2021 numbers are expected to be announced in Q4. So I would expect to see this continue to drop no matter whether the earnings are poor or really, really strong. I would expect to see this drop due to the fact that they are still going to be announcing a $45, $55, $65 million quarter here, if not more. So the question therein is, what are we looking for and what can we expect? As far as just expectations, I wanted to showcase some information over the prior 4 quarters. In terms of revenue, we have the 2021 numbers available here. It's looking very strong from a growth perspective. They have to continue this trend, but I also want to highlight some confusion that may arise from the net income that you can see here. If we scroll down below, you can see that net income go from negative 100 million, negative 80 million, negative 100 million to positive 115 million. For Q1 through Q3 of 2021, a lot of noise is baked into those numbers due to the fact that they had warrants last year where you could purchase. It was essentially an option for a stock. And due to the severe changes in valuation, that warrant liability was throwing out some crazy numbers. As such, that's why we got some of those ups and downs throughout the quarter. Those should no longer be on the books going forward, so I don't have any concerns over those numbers. But this is kind of just a state of the union of where we are. So the company is currently trading at a valuation of right at 22 times sales. And in terms of profitability, they are not profitable. You'll see some of the gross profit. That's the only area where we've got that profitability right now. But again, the important thing to note, don't focus on the EPS because it's going to be wonky, like I mentioned, but this revenue growth. I would expect to see, again, very strong revenue growth year over year. So we're going to be continuing to watch this most recent quarter until we have the data to truly develop in this platform, which I'm using TD Ameritrade, that total revenue growth. So the expectation is that year over year will be more than 100%. So that's what we're going to be watching. So now we're going to take a look at some of the investor presentations, and I'm going to showcase what I am going to be looking for this upcoming earnings. So let's dive over there. So what I have up here on the screen is a few of the KPIs, key performance indicators associated with STEM. The first thing that I will highlight is this contracted backlog. I think the contracted backlog is going to be one of the most important items that we're going to be looking at going forward. The reason I'm showcasing the 2021 numbers, again, this is the very first presentation they ever leveraged, is because I want to showcase, compared to a lot of other SPACs, STEM has really been very strong in terms of tying directly in to what they expect their full year numbers to be. So while other companies were making these obscene projections and then the company was falling apart, STEM, while still at least share price has been falling apart, they've been coming in right in line with their projections, and they are still technically above that original going live number of $10 a share via SPAC. So the first thing that I want to highlight is that contracted backlog. Keep in mind, it originally was $200 million. We're going to be seeing what this number is for that investor presentation, because it is going to be incredibly important for their growth if they're going to hit the 2022 designated number, which as of this presentation was $315 million in total revenue. So it's super important to watch. What's important about this contracted backlog compared to a lot of other industries or services is a lot of them talk about orders, particularly in the EV space. What's important about contracted backlog is this means that oftentimes an individual has already paid for these services. I know in the SaaS space, you generally pay upon signing the document. Or what this means is that they have already had a legal document signed that says we will be purchasing future services or products, and there's normally a penalty if you were to back out. So that is super important to be watching going forward. So this is going to be metric number one we are looking for the earnings announcement this Thursday. One of the things tied to backlog that I want to highlight, and I really don't appreciate that STEM includes this, so if there's anyone out there in the STEM world who is watching this, I'd like to have a talk with you, where this 12-month pipeline of $1.6 billion. Pipeline means nothing for external investors. This could be the company going out and in their instance of Salesforce or whatever enterprise risk management, any customer platform that they are leveraging, and saying that any company out there is a target for them. So this is strictly just a salesperson saying this is on my radar and I want to go and talk to this client. It means nothing for investors until they move from this target over here. Now, if they said, hey, this is our pipeline and on average we close 10% of that within 12 months, then that would mean something to me, because it would be adding $160 million in this scenario to the number there on the right. Because we don't know what the number is, this means nothing to us, and it's really a red herring or a red flag for me as an investor that they tout this number and how it continues to grow. So just keep that in mind when you're watching. They're going to be talking about it, and it does not really mean anything. Now, to the left of that number, this is a number that is very important, but again, this really should be reflected in the revenue we see there on the right-hand side. I understand that this is what drives that revenue, but I'm really more focused on that number over here on the right-hand side. So to close out what we're seeing on this slide, I want to highlight this is going to be item number one that I'm looking for from the presentation later this week, is going to be what is the contracted backlog. The second thing that I want to highlight on this slide, and I'll tie this into 2021, is you can see when they originally said what was the expectations going forward for 2021 earnings and revenue, they said we're expecting $147 million with 5 to 10% of that in Q1, 5 to 15% in Q2, 20 to 30% in Q3, and 50 to 60% in Q4. So let's take a look at the other presentation from January of 2022 to see what that looks like. So what I have here on the screen was from January of 2022. So this is that updated presentation. I want to highlight that contracted backlog. This is something that we looked at and talked about a number of times. It continued to go up. You can see that we're sitting at $312 million. The reason why that's important is because the 2022 number in terms of total revenue is $315 million. Keep in mind, when they're giving the presentation, they are going to be more than a month and a half into 2022. So any changes to the 2022 number will have to be driven by how they were able to grow that backlog compared to what was supposed to be their largest quarter ever. So if they are able to close $50 to $70 million in 4Q 2021 and grow this contracted backlog, I think that's incredibly bullish for the stock, because it means not only were they delivering on their total numbers, but they were doing so while going out and closing more of that business. So you can see these two numbers on the left-hand side did grow. Again, I'm going to say that I recognize that the contracted assets under management is a big deal, but what's more important is going to be that revenue, and that the 12-month pipeline is completely made up numbers. So I don't really care about that unless they were to say that we have a close rate tied to that 12-month pipeline. So what I want to highlight compared to what we were just looking at, 5 to 10%, you can see of the number there on the left-hand side. 15.4 comes in right in the middle there, a little higher to the high side, closer to 8 to 9%, so spot on here. Q2, same thing with $5 to $15 million. It came in spot on. Big fan of how that pulled together. And then 3Q 2021, $40 million, and again, coming in right in line with expectations. What we're going to be looking at for this Q4 number is that they reiterated confirmation that they're expecting 50 to 60% to be in Q4. Keep in mind that these numbers came in after the end of the year, so those items should already be included in those numbers, and that would have been the great time to change expectations. So the next thing that I want to highlight, we're going to go back to that earlier presentation. So what I've pulled up is the original presentation that was leveraged again in January of 2021, and this showcases the revenue over time. So again, you can see in terms of that expected revenue down here below, 147 million, those numbers came in. The thing that we're going to be looking for this year is 315 million. Now, we should already have a pretty large head start due to the acquisition of Also Energy, which should be bringing in between 50 to 60 million dollars in total revenue, and hopefully more going into this calendar year, which means that organically they need to go out and grow another 115 million or so between the combined 2021 numbers. So this is a number that's already been reiterated. They said they expect to do that by acquisition. The question is, are they going to achieve this? And that is going to be kind of point number 2 that I'm going to be watching. So if we go back up here in terms of what I'm describing as the 3 things to look for, this first one going to be that contracted backlog. The second one is going to be 2022 guidance. So this is going to be super important for anyone who's an investor in STEM, because depending on this guidance, this could be what causes the stock to explode from these levels or to continue to peter down. Are they going to reaffirm this guidance, which I think is going to be good for the stock, or are they going to raise revenue forecasts? Because STEM has continued to perform very well, because they've locked in a lot of long-term hardware contracts, they've been able to be in a position to continue to drive growth without having to raise costs too much. And from what I've seen and what we've been hearing from the CEO as well as the CFO is that they've continued to see strong demand for their product, and I don't expect that to go away. Keep in mind, all of these projections, as well as the company itself, has been operating in a world where the Build Back Better plan currently put forward by the administration or President Biden, because that has not gone through, all of these projections have been made with the idea that that will not. Should we see an infrastructure plan, or should we see additional credits that favor clean energy go forward, any of these projections could continue to do very, very well for the company. The other thing that I would highlight for this calendar year is this is the last year that we would expect the company to not be profitable. So the second thing we want to be watching for this calendar year is we see a pro forma gross profit of 82 million and the free cash flow of negative 7 million. What they have stated is they don't expect to be profitable until 2023. So that is the last thing that I'm going to be looking for. Again, we saw that revenue guidance for 2022 is kind of the second thing. The last thing is, are we going to reaffirm we expect the company to be profitable in 2023? And they are going to continue to see cash burn throughout this year, whether that's due to the fact they went through a very large acquisition, as well as the fact that we've got a lot of moving pieces in terms of growing the sales force, bringing that acquisition into the fold. There's going to be a lot of cash burn. The question is that going to get them to profitability in 2023? If so, if those three conditions are met, I think the company does very, very well going forward. As such, if any of those things miss or do not hit, I think the stock could continue to get punished. To close this out, let's go back to TD Ameritrade. What I have on the screen is the chart of the 1-year performance of STEM. As you can see, the company has continued to go on a decline since really last summer when they completed the acquisition. And since then, they've been on a straight downward spiral. That being said, I still believe in the company and am bullish long term, but there are a number of things that I do have concerns with going into earnings season. Keep in mind, the market is not open Monday for President's Day, so that is going to be February 21st. So we have 3 trading days before we hear earnings on Thursday after hours. The first thing that I want to highlight is if we look at the insider buy-sell information associated with primarily 2022, you can see that there have been quite a number of insider buy-sells, especially if we go into 2021, there's quite a few there as well. All of these have really been sell orders. So whenever you see a number of your institutional investors, or rather, not your institutional investors, but your insiders, if you see a lot of them selling, that tends not to bode very, very well. In fact, it can be somewhat worrisome. However, on the reverse side, some of the buyers that have come in have been these held by institutions, these institutional investors. One of the big ones that's come in and has continued to buy up the company has been BlackRock. So there's a lot to say when you have some of these big buyers, these huge investment firms like Vanguard, like BlackRock come in and buy up the company, it tends to bode well, especially because a lot of those institutions are not short-term holders, but rather long-term. They park their money and let it work. So something that you have to remember when you're investing in a company like STEM is that they are in a position where their current valuation is very high for where they are today. But if you value them based off 2023 numbers, or your investing horizon is 2025, which since I've started making STEM videos, I have continued to highlight this as part of my 2025 portfolio, then I think that there continues to be a significant amount of value tied to the company. As such, we're seeing that reaffirmed by institutional investors such as BlackRock, such as Vanguard. However, again, I do have concerns over that insider selling, but I do recognize that's the state of the market that we're in, and there are still some significant holdings by that group. So all this being said, I'm going to cover earnings live, as well as I will always make a follow-up video when those earnings come out. There's a lot of exciting stuff that's going to be going on, and we're going to cover that right here on the channel. So if you find this content helpful, please leave a like and subscribe, as it really helps the channel to grow. And if you made it this far, thanks for watching. Thanks. Talk to you later.